Hi there, welcome to Kneppy Invest and welcome to another answer and question video. It is Saturday, 16th of August, 2025. Time is currently 9:36 a.m. So I'm going to go through some of your questions and your comments and answer and reply to those to the best of my ability. Starting off with Deb Shaw, who has just a comment in regards to West Coast Silver's relationship with Next Investors. So the share price of this company, West Coast Silver, rallied significantly on the 8th of August, I think it was. And they did receive a price query from the ASX, and they confirmed in this price query that the company has a paid relationship with Next Investors. So West Coast Silver pays Next Investors to promote this company, and this is something quite common on the ASX. I discovered this a few years ago, particularly with Next Investors. I think there's also East Coast Research does this as well. I saw that one company mentioned that they pay Next Coast or Next Investors to promote the company. And whenever Next Investors comes out with a recommendation or an article or something like that, I get an email. Typically, the email is released after the market has opened. So that's after the share price has jumped up. And we always see the share price jump up for some reason. I just don't understand why people buy on these recommendations from Next Investors or East Coast Research, particularly because they are paid to do it. Yes, anyway, so West Coast Silver has confirmed this. If you don't know anything about ASX price query, this should be an ASX price and volume query. This is just when the share price of a company goes up significantly on no news flow, and typically it's linked to an increase in volume. ASX obviously wants to know why. Why is there sudden interest in a company? Now, when it comes to the response to an ASX price query, typically question one is all about, does a company have any information that explain the movement in the share price on volume that it has not released to the market yet? And typically a company will say no. On occasion, you will see a yes, and that's because the company just hasn't released some information, and that information has been leaked, and that's why we're seeing a sudden rush in buying of this company or selling. But typically you see no. If they say no, question two is not applicable. But question three is when a company has a lot of creative license. So question three is simply, is there any other explanation the management has that could explain what's happening with the share price? So the management have a lot of leeway here to try to explain what is happening. Why is this happening? And I will say I get a little bit peeved off when a company just says no. And I really get peeved off if it's no, not applicable, no, and that's it. Because they have so much license to be creative, to try to explain it, and you get some really good responses. Now, this was a pretty good response because I just mentioned the company is aware of two emails circulated by Next Investors and an article published this morning by Next Investors titled "Our No Portfolio Edition West Coast Silver." I saw this, and as soon as I saw this, this was after the market had opened, I went to see how much the share price of West Coast Silver had risen, and had risen a lot. The company confirms that it has a paid commercial relationship with Next Investors for investor relations services, including the preparation of investor material such as this article and to promote the company. Probably the other question I would have in this particular, the article, it's titled "Our New Portfolio Edition, West Coast Silver." Did they really add it to their portfolio, or is this just marketing? Is this just some sort of marketing scheme where they've just titled it like that to make it seem like they've added to this company to the portfolio? Because that's a pretty, that could be a fairly dodgy thing to do. To give the illusion that they have a portfolio and they've added this company to the portfolio, because how coincidental would it be that they've added this company to the portfolio, but they've also paid to promote the company? So I actually have further questions when it comes to this and these sort of relationships. And Next Investors and East Coast Research, there might be others out there, have quite a few of these relationships with small mining exploring companies. Now, I don't mind that these sort of companies are promoting companies. I don't mind that, but I do think there needs to be further questions from the ASX around this. They also added, I didn't read the rest of this, responses to additional information requested by ASX. Oh, okay, so the ASX asked them more questions. I didn't really go through this. Please advise what arrangements. Okay, this is just about assay results. I am. So thank you for that. And I think this is something I discovered a few years ago. And I think most investors should be aware of these sort of relationships. And it's not that commonly known, I think. And the only reason I think I knew the first time was because of a price query from the ASX. So there you go. So thank you for that, Deb Shaw. Okay. Oh, what's this? What's this? Trader Hooper, Avita Medical. Thanks for covering this one. I thought the announcement was a shocker and was actually surprised it didn't move for more. Now, on reflection, I'm thinking that this might be a good buying opportunity between $1.34 and $1.54. I'm in no hurry because I think it will be in that range for the next 3 to 6 months. They only report twice a year, so moving the expected profitability to the first half of 2026 from the second half is just moving it back one reporting period. The problems with hospitals and doctors getting reimbursed slow their product usage, but once they have resolved this, they might be on track. Finally, I quite like Friday's candle, definitely on my watch list, watching for any kind of bottoming and then move into an uptrend, not expecting it soon, but expecting it to happen. And Trader Hooper replied to his own comment, and 6 or 7 days apart. That comment didn't age well. It was a good buying opportunity, but is recovering much more quickly than I anticipated. The cover raising announcement really was a turning point. They said they needed to raise capital, so getting out of the way quickly removed the uncertainty surrounding it. In fact, that's what I would have said, because I did notice that Avita Medical share price had rallied a fair bit. So let's have a look now. And this was actually on my watch list in terms of a buy, just because I thought there was probably some value. And I think that the market was overreacting. And I thought this company was fairly cheap. I think the market cap was definitely below 200 million when I looked at it. Now it's 237.6 million. And the share price has rallied significantly. In fact, it's gone back up to where it started. Yeah, share price got down to $1.37. Now it's $1.75. So we're seeing that rally fairly quickly. Now, the share price right now is in a bit of a resistance zone where the share price was before this. So it remains to be seen which way it goes from here. But yeah, that was pretty good buying at $1.40, but that's gone now. Yeah, so a lot can happen in 1 week. All these happened in one week. So thank you for that, Trader Hooper. So this was on my watch list, and I haven't really followed it, except I saw it on the best gainers a few days. Yeah, there was one day I was up 13.8%, 6.5%. Yeah, so it definitely came onto my radar on those days just because the share price had rallied. And I thought maybe that was just a dead cat bounce, but anyway. I am ECAR. In such case of Shopify, when it moves to the largest holding, high percentage of the portfolio, is it best to trim profits or hold? Okay, I think this is subjective. I think probably the question would be, why did you buy the company in the first place? And if the company is now your largest holding, are you comfortable with that percentage? Say Shopify was 20% of my overall portfolio. Would that be comfortable? For me, I wouldn't be as comfortable. And the other question is, how much confidence, how much conviction do you have in that holding? Now, if you're trading it, maybe you could just use technical signals. So I think it comes back to confidence, conviction, and the reason why you bought. Is there any reason? So if you go back to the reasons why you bought, have those reasons still in play? Has anything changed? And I think it's just confidence and conviction. But in the case of Shopify, it is my largest holding right now, but it's not in terms of highest percentage. And I'm confident. I have no reason to trim my position in Shopify, because I think it has significant growth moving forward. Now, that's my feelings, my thoughts on the company over the next 5-10 years. And I haven't even thought about selling any shares in Shopify right now. And, go back to hold your winners for as long as possible. And Shopify has definitely been a winner for me, and it keeps performing. Gil Saab says, Kogan, share recommendation, please. Buy, sell, hold. Well, I can't give buy, sells, or holds. Now, I can do it. I can say for myself, it could be a buy, sell, or hold based off different criteria. Now, would I define Kogan as a high quality company? Well, let's have a look. I'll just do this really quickly. Kogan via Fiscal AI. And this is what I do for all companies very quickly sometimes. Sometimes I already know if a company is high quality or not. With Kogan, my thoughts would be no, it's not high quality. And let's just confirm that. So revenue growth, revenue growth over the last 3 years is actually negative 14.9%. Earnings per share growth has been negative the last 3 and 5 years. What's happening there? So straight away, some red flags. Gross margins 38.2%, operating margins 5.1%. I want to see operating margins significantly higher than that. Now, that's only a 1 year sample. I like to look at 5 years of operating margins, and I still don't think that's going to be more than 10%. Return to equity, return to invested capital are negative. So this company hasn't got the financial metrics for me to describe this company as high quality. According to this, the P ratio is 322, probably because the profit in the last year was fairly low. And also the dividend payout ratio is 843.5%. Yeah, I don't know. If we have a look at the financial history, so yeah, the nice growth in revenue up until 2021, a lot of tailwinds with COVID-19. Those tailwinds came to an end. The company management were over enthusiastic about online shopping, and they spent too much money on inventory, if I remember correctly. And that really destroyed this company back in 2021, 2022. And since then, revenue has dropped a fair bit. Maybe it's finding a bit of a flaw, and maybe the company can see revenue growing again. So for me, this is not a high quality company. Now, maybe it can continue to grow over the next 5 to 10 years. Maybe, just say maybe. Now, I do think they have a lot of competitive pressures. I bought one thing from Kogan about 5 or 6, maybe, actually it would have been about 7 or 8 years ago, and I've not gone back. So I definitely have competitive pressures, and I like to see some more growth and that sort of thing. So for me, if a company is not considered high quality, I just go to the chart. So it's more of a trading stock. So what I want to see is either a pretty good, some sort of financial report, and then a breakout. If I don't see any sort of that, I'd like to see any sort of sentiment or change in the trend of the share price. Or maybe the share price is in an uptrend right now. I doubt it. No, so the share price is in a downtrend right now. So I want to see, before I even think about buying Kogan, I want to see some sort of shift in the sentiment in this company, which would change a trend. And we're not seeing that just yet. Now, maybe the share price has found a bit of a flaw here. Share prices might be going sideways, but I need to see a bit of proof. And the best way to get that is a really good financial report or some sort of upgrade in their financials. And then you might see the share price pop up to, say, 420, 430, and that could be the start of a new uptrend for Kogan. So Kogan's not on my list right now in terms of trading, and definitely not a high quality company by my own definitions. Now, I think you have to define your own what high quality means for you. And so Kogan could be a high quality company for you, and it could be a long-term hold. So again, I think it comes back to, why would you buy Kogan? Why? Okay. Euphoria 651 says, why do you exclude oil, gas, metals, and mining? Ethical reasons, volatility, cyclical nature of the industry. So this goes back to my screener, and we'll go to my rule of 10 high quality screener, and I excluded oil, gas, and consumer fuels, metals and mining, and capital markets. I excluded capital markets simply because a lot of fund managers are in that sort of thing, and that's not the sort of things I want to own for the long term. But I excluded the mining because they're cyclical. They're all price takers. And for me, a price taker in itself cannot be high quality because they have no control over the price they sell their product for. And that's actually a really bad red sign. And all mining companies like that, they have no control. Like a gold company has no control over what price they sell gold. Now, they could hedge it, but gold prices go up and down. And if gold prices fell by half, they have no control. They have to take the price that gold is at that point in time. So that's why I exclude mining companies, because they are price takers, and by definition, they cannot be high quality. By my definitions, they cannot be high quality. In saying all that, because they're highly cyclical, and they're definitely cyclical, I think they're great trading stocks, particularly in the medium term. You buy at the bottom of the cycle and hold for a few years. So I actually do think mining companies are great trading stocks, maybe not in the short term. I'm talking about the medium term. In fact, I'm trying not to trade mining stocks in the short term because they can be quite volatile. So it's more the medium term. Anyway, so hopefully I've answered your questions. Definitely not ethical reasons. Volatility in the short term, volatility, but it's definitely cyclical nature of the industries, and they're by definition are not high quality companies. And this screener is Rule of 10 high quality. So Rule of 10 high quality. Okay, Michael Jaber, hi there. MTM Critical Metals has a great run. How does it continue, or is it over? Okay, this is easy. Let's have a look. It's been, I haven't seen this for a while. Where is it? Has it changed its name? MTM, did it change its name? I'm pretty sure MTM. Change of company name, yeah, 18th of July. There you go. I missed that completely. So for me, this is MTM Critical Metals, but they've changed the name to Metallium. There you go. I did not know this. So there you go. That shows you how often I look at this company. Anyway, I was a little bit surprised. I could not see MTM Critical Metals. Okay, so this is a chart for MTM Critical Metals, and I was paying more attention to this company back in early 2025 when the share price broke out, a beautiful breakout in December, a beautiful breakout at around about or just above 10 cents. There was a nice pullback in February, March, and then the share price has taken off. I wouldn't say it's struggling right now. We've seen a little bit of a pullback. Share price has gone from about 90 cents back to 71 cents. This is not necessarily a bad sign. Now, the share price has hit the 25-day moving average, and I'd like to see the share price rebound. But if the share price keeps on dropping, that could be negative. If I was trading this, I'd probably have my sell or stop loss sort of down that level. So that's the lows back in July. But I wouldn't say this is bad because the share price has run up a fair bit in a short period of time. It's gone from 16 cents up to 70 cents in about 4 or 5 months. So it's healthy for it to take a breather. The only thing I'd like to see is a bit of volume coming through. I'd like to see some volume. I'd like to see some big spikes in volume. Anyway, so that's Metallium. Yeah, anyway, so does it continue or is it over? Well, there's no absolutes when it comes to this. No absolutes, but I could see it going further from here. The question is how much further? Anyway, so that's Metallium. Mr. Jigar Civil, can you do for 29 metals, please? Okay, let's have a look at 29 metals. I'm assuming, just looking at charts, I don't know. 29 metals, copper. Copper, it went on a nice little run for a while, but then we had that big drop in copper. In fact, you could have put a little bit of a short-term uptrend there, and it broke through that uptrend back on the 31st of July, and then share price has started to go lower since then. So I suppose that's a slight negative. Now, sometimes when you see the share price pull back like this, maybe that could be just a sort of the buy the dip situation. Now, again, this is a mining company, and it's mostly copper, if not completely copper. I'm trying to remember, but the share price of 29 metals is going to be highly influenced by the price of copper. If copper goes on a massive run, 29 metals probably goes on a massive run as well. But copper drops by half, 29 metals drop by half as well. So this is another case where the underlying commodity is really important. So let's have a look at copper chart right now. And there's a big drop, and yeah, copper, it's a big meh for me. Big meh. Now, the other thing I probably should mention here as well is 29 metals had that problem with, I think it was called Capricorn, something or other, I think it was north of Mount Isa, got absolutely flooded. Was it 2 years ago now? 2.5 years ago, I think it was. And in fact, we could almost tell. So, yeah, it would have been start of 2023. Share price dropped like a rock because that mine, because it's completely flooded. I still think there's water there. They had to suspend mining there. They still have another mining production, but that's one of the reasons why the share price has dropped. I'm pretty sure they've done quite a few capital raisings because of that. Still burning through cash. I could be wrong there. In fact, we can actually have a look. 29 metals. I'm trying to remember if this company releases Appendix 5Bs. I can't remember. They've released a few presentations recently. Let's have a look. Quarter report. Of course, it's a mining company, so they do release quarterly reports. They also release half-year and full-year results. And let's have a look what they talk about. Capricorn Copper. So the other mine they're in production is called Golden Grove. So Capricorn Copper, successful wet season included end of April, which means no more flooding, I suppose. All opportunities utilized for treated water releases. Water inventory reduced by 1.3 gigalitres since the decision to suspend operations. Surface water inventory reduced to below maximum operating level. Yes, so I just don't know when they're going to go back to production for that mine. The other thing I like to look at is any sort of levels of cash. So here's their copper production, or they produce zinc as well. I just want to know how much cash they have, that sort of thing. Let's have a look. Here we go. Group cash and cash equivalents. So they started the quarter with 166 and finished it with, what's that, $187 million. Now, one of the reasons behind that increase in cash was because of insurance proceeds, which was 54 million. And if you have a look at group Golden Grove operating cash flow, 23 million, but the Golden Grove investing cash flow, 24 million. So that particular mine was not cash flow positive. So the only reason cash increased was because of insurance proceeds, but a fair bit of cash on hand. And I'm trying to remember how big that company is. So market cap, according to CommSec, is 377 million. Now, I don't trust CommSec. I actually trust market index a little bit more than CommSec. I've seen some really bad market caps on CommSec, and it's worth trying. Let's have a look to see what, 377 million, so they're both right. So a fair bit of cash on hand for this company, but again, I'd like to see what happens when Capricorn goes back to production, or when that's going to happen. Okay, Stu Percy says, have you looked at Neuren Pharmaceuticals lately? Chart looks great, but earnings and revenue are expected to drop over the next year or two, but the chart keeps going up. Any thoughts? Well, I'm trading, I do own Neuren, but I'm also trading Neuren right now. Share price actually dropped a fair bit the other day. The reason I know that is because I'm trading it, and when I'm trading shares in a company, I look at the chart every single day, and for some reason the share price dropped 5% on Thursday. Now, one of the reasons behind that could be just the share price had gone on a run. So the chart does look good. My other question would be earnings and revenue expected to drop over the next year or two. I'd probably question that. Where do you get that information from? Because they're getting the royalties from the selling of Debut from Arcadia, and I would assume that the revenue is going to increase over the next few years, and they should get higher royalties. Maybe they'll spend more on research and development. So I would assume earnings and revenue actually would go up over the next year or two. That would be my assumption. Anyway, so that's Neuren. So the chart looks good. Chart looks pretty good. Even though share price has pulled back a little bit over the last few days, that could be just a little bit of profit taking because we have seen share price go on a bit of a run. Okay. Oh, nice. 007420 says, great video as usual. Can you explain how you maintain holding in Shopify despite falls in its stock price, which traders would sell? Because, simple answer here is because I'm not trading Shopify. I am actually holding it for the long term. So I actually don't trade any companies outside of the ASX. All my trading is simply done on companies on the ASX because I can get in and out fairly quickly and fairly cheaply. When it comes to my international holdings, they're all in my super, and I don't trade those at all. So Shopify could have been a trading sell after I bought, but I didn't buy because of technical reasons. I bought it because of valuation reasons. And if we have a look at the chart for Shopify, let's go back to see when I bought. There it is. So I bought. Well, funny enough, I said I did not buy this for technical reasons, but I bought just a few days before there was a moving average crossover. So I bought this because I thought the share price had dropped a lot and it was looking pretty good value. Share price had gone sideways for a while. and it wasn't the worst technical trade if I was trading this, and in fact, if I was just trading this, there would have been a few times I would have been a little bit nervous, like back in October 2023. Share price looked like, oh, maybe it was right turning over. August 2024, that looked pretty nasty as well. Looked pretty nasty in April 2025. So there's actually been a few times when the chart started to look a little bit nasty, but because I'm not following this chart all that often, I don't look at my long-term holding charts all that often. In fact, sometimes I won't look at it for weeks and weeks because I don't really care about the technical analysis. Now, sometimes I would trade these, but I don't because I don't these particular holdings because they're on the international exchanges. So I'm not trading Shopify at all. So that's a simple answer because I'm not trading it. It's just a long-term hold for me. It's a high-quality company. Look, and for me, let me explain it in this way. So I suppose I have three trading strategies. There's long-term holds, that's in my super. I also have trading. So that's more on that's ASX companies. It can be any company, including low quality, high quality, and these are just using technical signals. In the middle, I have a bit of a gray area where I look for, not gray area, but I look for value. So if I find a company that's really good value, I might take a position in the company, even if the technicals aren't that great, just because I think over the medium term, the share price might go up. So in a way, what I could say is my super is the long term, or the quality companies are long term. My trading is short to medium, possibly even hopefully long term. But the other strategy is more of the medium term. So these are value companies, maybe even small caps that I think have a good potential. And also these are mining companies who are at the bottom of the cycle or are sort of in the upswing. So these are more the medium term, trying to get rid of that volatility in the short term. So this could be lithium right now, because I do think lithium is probably near the bottom of the cycle. And I think you have to be patient for those and have to have a more of a longer term outlook than, say, the very short term. So I've just shifted how I trade mining companies. Instead of trading them for the short term, have a more of a medium term focus. So Shopify fits in that first group, high quality company, even though I wouldn't actually call it high quality, but I think it has tremendous growth potential over the next 5 to 10 years. But it definitely has the potential to be high quality in, say, 10 years' time. So for me, it's more of a long-term hold, and I don't really care when it comes to technical signals. Oh, another one from I Am Ecar. Insightful indeed. Thanks, Kneppy. Let's say identify a company with strong fundamentals, solid financial performance, healthy balance sheet, and good growth prospects. But the current market cap or current market price appears overvalued relative to its intrinsic value. Examples might include Wesfarmers. I agree with that. Supply Network, yeah. Or Pro Medicus, yes. If I currently hold no shares in the company, what would be the most prudent course of action? Wait for a price correction, use a stage entry strategy, or consider alternative opportunities. Okay, for me, I've changed my thoughts on this sort of thing where I used to wait a fair while until I saw a good buying opportunity. And a lot of times when I found that good buying opportunity, the share price of the company was actually higher than when I started waiting. And when you look at high quality companies, so that's the most important thing here is this is just for high quality companies. So over time, high quality company share price should increase. So valuation matters a little bit less than what you might think, because over time, the share price should increase. But if a company, even a high quality company, is significantly overvalued, like Microsoft was back in 2000, like CBA is right now, there can be a period, although CBA is not high quality. Well, yeah, I wouldn't call CBA high quality. If a company is significantly overvalued, then the share price might go sideways for a long period of time. Now, for high growth companies, and I think a lot of high quality companies would be growth companies, a lot of times because they are growing, even if they look overvalued, it doesn't take much for that company to look fairly valued. It might only take a few years. So Pro Medicus has a P ratio above 300 right now. But if they say double their profit over the next, actually, we'll say triple or quadruple the profit over the next 3 to 4 years, which they could do, maybe not 3 or 4 years, maybe 5 years. If they could triple their profit over the next 5 years, the company is looking cheaper. isn't it? Yes. So I've changed the way I've looked at this, where valuation actually doesn't matter as much if it's a high quality company, because the share price over time should go up. And Pro Medicus has looked expensive for a long, long time. And I actually bought some Pro Medicus 3 years ago, I think it was, when I thought it was looking really expensive. Share price was $55. I thought, look, it's expensive. $55, it's expensive, but what I'll do is I'll buy some shares right now, and if the share price pulls back, I'll add to my position, and then I just watch the share price go up and up and up. In fact, when I bought at 55, share price did not get any lower than that. And the share price, look at that chart. Yeah. So I've really changed my thoughts on this, that just waiting until the company is good value, you might be waiting a long, long time, and the share price might be significantly higher by the time you get that opportunity. What's another good example? Well, yeah. Now, in saying all that, when you do get the opportunities, yeah, jump in. That's what I did with a Nasdaq and New York Stock Exchange companies back in 2022. Share price drops of all these companies, and I found a really good opportunity. I bought quite a few companies during that period. But that was before I've had a bit of a change in heart, that when it comes to high quality companies, what I'm going to do now, and I did this with, the other thing I did this with Technology One. This is another one I did, Technology One. So I thought, Technology One is a high quality company. And I took a position, 1627. And I thought it was expensive even at that point. I was like, it's expensive. Share price is going sideways. Yeah, but I'll take a position, even though I do think it's expensive. And the share price has gone from $16 to $38 in a few years. I think even that I bought, that was before my change in heart. I think my change in heart has occurred in the last, say, 6 months or so, where I think that valuation doesn't matter as much for high quality companies, because you can see share price of Technology One has just gone bonkers since then and looks even more expensive now. And you don't see the share price pull back all that much for these type of high quality companies. Anyway, so hopefully I've answered some of that. For me, what I do personally now, before I'd wait for a price correction, but now what I've done, say Pro Medicus, even Technology One, I had the same sort of mindset then. Just take an initial position, and if the share price pulls back, add to that position. And the ultimate goal, my ultimate goal, is to hone as many high quality companies as possible. In my super. There's a few questions about this. Dan Bag 230 says, "Hi Kneppy, did you watch 60 Minutes tonight that covered ETM? Thoughts?" No, I did not. I did not watch. In fact, I don't watch any commercial TV, so no 60 Minutes. Although you probably could stream it on Nine Screaming app, but I don't watch. I watch very little commercial TV, even the app. So whenever 60 Minutes has a show, I miss it, or a good segment, I miss it. I did watch one, I think it was Four Corners. I watched something on, was it Four Corners who did the Strata thing? Like, was it a year ago or something? I did watch that. Anyway, so ETM, opening true to the 60 Minutes Greenland documentary. So this ETM, 60 Minutes, was on Greenland. Looks like a few people picked up on a Friday. Wish I'd seen a story coming up, as I would have jumped in last week. Too late now, though. So there's a few questions about this. Sensei just mentioned ETM. Share price went from 5 cents to 13 cents on that 60 Minutes Greenland documentary. So let's have a look at ETM. Now, I typically won't rush into even if I did watch it, I probably wouldn't rush into these sort of things. It's just on, I'd probably say this company is a story stock. Would that be fair? Would that be fair? And then on that day, the share price went to 15 cents and then pulled back significantly. And currently the share price is at 9.5 cents. Now, you could say the share price is just below 10 cents, which is a fairly important level. And this is more proof that 10 cents is really important. Just put a line at 10 cents. And all you have to do is go back to January of this year. You can see the share price went on a massive run, got to 10 cents, and that was it. Share price pulled back. Share price got very close to 10 cents in March, 9.8 cents, and pulled back. Share price got above 10 cents on Monday, In fact, it got to 15 cents. It has pulled back and is struggling to get above 10 cents. So right now it's 9.5 cents. So if you're confident on energy transition minerals, I would say get in below 10 cents, because once it breaks above 10 cents, it could remain above 10 cents for a while. But that's all I know about energy transition minerals. It's a story stock, and how powerful is their story really going to be in the longer term? Did they release anything in regards to this? Nothing. Oh, they have an investor presentation. First time, maybe not the first time I looked at this company. The name seems familiar, but sometimes when I get or see a company I've never heard of before or looked at before, I like to look at a presentation. I know it's lazy, but I just like it. Shaping the future of Europe's critical metals supply, a rare earths project in Greenland, and a tin and niobium mined in Spain. Now, the problem with Greenland is I've read somewhere, I don't know where, that mining in Greenland is really tough and expensive. It's really tough and expensive. And that is why you don't have much mining out of Greenland. But maybe they can get around that. Maybe. Okay, let's go back. Ben Hutchinson says, distinct cup and handle formed on Bioxynes with expected volume pattern. I just topped up on anticipation of imminent breakout to multi-year highs. So this is one company. So this is not a high quality company, but this is my super. So this is a small cap company that I'm not trading. I decided not to trade. And originally I was going to trade this one, and then I realized because of the volatility, too much volatility, that this is more of a medium-term hold, because the company is growing significantly. Has grown significantly over the last few years, or the last year, we'll say, and has become profitable, cash flow positive. So it's hit that inflection point. And this is a case where I don't want that volatility to stop me out of a company whose share price and valuation might increase significantly. So I'm less likely to trade Bioxynes. And I've done fairly well with this one because I bought at 1.2 cents. So let's have a look at this cup and handle. And apparently cup and handles are quite powerful signals. What I'm going to do before that, cup and handle. Now, I wouldn't call myself an expert in reading these sort of setups, but I do know these setups. Cup and handle pattern. It looks like a cup and handle. Yeah, that's what it does. It looks like a cup and handle. Here it is. Can you see that? I don't know. This is from Investorpedia. Where was it? Yeah, it looks like a cup and handle. Sort of like a round, there's a cup and there's a handle. Yeah, so apparently these are fairly powerful signals. Yeah, that's based off a few books I've read. So let's have a look to see if we can see that sort of pattern. I think what we need, let's have a look to make sure, February 12 to July 28. Okay, so if I can draw on this, I'm pretty sure I can draw somewhere. See if this works. So there's the cup, but there's maybe a very slight handle. Maybe a slight handle. I can definitely see why Ben is saying that, because if you draw a line there, because if you have a go back to the cup and handle, you can see the tops in the cup. So the tops in the cup should be fairly aligned on either side, because otherwise it wouldn't be a cup. And then you need to see the share price pull back. I'm pretty sure even in some of the books I've read, they talk about the volume we want to see. And I'm pretty sure you need to see some lower volume in the handle. And then when the share price breaks out of the handle, you want to see some high volume coming through. So the handle in this one looks like there is a very small handle. I can definitely see what Ben is talking about here. The one thing I'd like to see here is a bit of a breakout above the top of the hand or the cup. We haven't really seen that just yet, but look at the volume on the upslide here. So very low volume as the first bit of the cup was developing, and then all of a sudden we're seeing some big volume coming through. So I can definitely see what Ben Hutchinson is talking about when it comes to Bioxynes chart. And this is the first time I've looked at this chart for ages. Probably about 2 or 3 weeks, even longer than that. Thank you for that, Ben Hutchinson. In fact, the cup and handle was one of the first technical patterns I read about many, many years ago. And I think that's the reason why is because it's so powerful. Okay, Millsy says, with the minister due to sign the final environmental approval soon for VRX Silica, is it worth taking a short-term position? Looks like things are building. Well, that's for you to decide. It's for you to decide. VRX Silica. This one's been on my radar as well. Maybe technical reasons. So DMP approves mining proposal for Arrowsmith North. So obviously this is a story stock, even though they have a mining approval. I mean, many things could go wrong. So they're still a story stock, in my opinion. And the reason they're a story stock is because they don't have any production. So that for me is still makes this company a story stock. And even if they get this mining through, how financially successful are they going to be? So still a lot of questions for me. So for me, this is more of a trading possibility. So let's have a look, because it's not high quality. And it's not really, when I'm talking trading mining companies for the medium term, I'm talking more of the producers. Yeah, not this sort of thing. But in saying that, this chart looks pretty good. Now, the share price broke out back in May. There was a 2-day rally, and the share price went sideways for about 3 or 4 weeks, maybe in a month. And that was a good sign. The share price has really gone, it's nice. It's not a bad chart. Share price hasn't really gone exponential. Now you can see, you could probably argue went exponential these 2 days, but then the share price went sideways. That's exactly what you want to see. So with the share price going almost exponential the last week or so, what I want to see is the share price go sideways. You don't want to see it going higher and higher and higher. Share price has broken above 10 cents. In fact, the share price broke above 10 cents on this news, it looks like, the 8th and 11th of August. Yeah, so share price tried to break out on the approval. And I think we had confirmation of the breakout then on the 12th, with the share price getting to 13 cents. So this chart looks good. If the share price falls to, say, 10.5 cents, that might be a nice little buy for VRX Silica. I'd probably like to see some high volume coming through as well. Yeah, that's one thing I'd like to see, some really big volume coming through. But the chart does look good. That's ETM. Peter Timp says, yeah, lithium is way too risky for me. I was in early and tripled my money and got out. Quite happy not to get back in. Might be a little bit of a short-term cash to be made, but I'd much rather put my money somewhere else. And that is the market. That is the market. If anything, for instance, lithium, I think bottom might have been reached, but in the short term, I just don't know. But in the medium term, I think if I am playing lithium, it's going to be the medium to longer term, just waiting for the next upturn in lithium, which I do think it's going to eventually happen. I just don't want to try to absolutely time it. So I have taken one trading position. Actually, I've taken two. One trading position in lithium, that's Pilbara. So let's see how Pilbara is doing. Yeah, Pilbara's, and yeah, this is okay. So I'm happy to own this for the for the medium term. And main reason behind that, it's the producer. And I think if lithium really goes higher from here, and it might take a few years, Pilbara will definitely benefit from that. So I'm okay with this chart in the short term. The other one I've traded, and this was just sort of testing something, was Novonix. Now, the reason I did this one is the chart doesn't look that great, is because the share price fell heaps, and I saw that the bottom might have been reached. And I don't usually do this. I don't usually try to time the bottom, but I thought, I think the bottom has been reached on the 4th of August, and I bought, I think it was bought the next day, and it's gone up a little bit, maybe 10% since then. But I have less confidence in this one. But I do think even with this particular chart, you could argue that maybe, now, the chart doesn't look good, but this was more of a short-term sort of bounce share price. And the share price has bounced a little bit, but not as much as I'd want to. There's another one from Dan Bagg in relation to ETM. 60-minute special, pushing rare earths in Greenland. Okay, Astronomic YT. What happens to Telix today, August 11? Interested to hear your thoughts on its next support level. Kneppy ugly chart. probably $10, free falling on no news. If this is a quality stock and respects the 200-week moving average, it should bounce around $15. Hopefully, we see a bounce before then, but that is a support for that particular rule. Currently up a bit today. Let's see how long this lasts. Okay, so Telix is another company that I do own in my super, but if I was trading Telix, I would have been out ages ago. Would have been out ages ago. You can see the share price was in a beautiful uptrend. Share price broke out in January 2024. You can definitely see it struggling, starting to struggle 1 year later. Reached a high in February of this year, but the next high was lower. Then the next high after that was, it struggled to get above the previous high. So the uptrend was coming to an end at that point, and then definitely sell signals back in June before the share price started to drop. We have seen a couple of days where the share price has dropped, and I think this was an overreaction from the market. But then again, it's just sentiment. I think a lot of negative sentiment has drawn the share price down. And I saw there was an email from Marcus today. So they were holding it and they got out. They got out just because negative sentiment. That's it. And that can exacerbate the share price dropping. So people getting out because they see the share price dropping. And what you need to see is a bit of support. So it looks like the share price has started to maybe bounce at about $16, $17. Now, onto Trader Hooper's thoughts. Actually, before that, yeah, there's a bit of support. There is a bit of support at that level that goes back to early 2024. So there is a bit of support at $17. I also have a bit of support at about $12. That goes back to 2023. And yeah, but let's have a look and let's just consider Telix Pharmaceuticals to be a high quality company. Which, yeah, in my maybe. And the share price has pulled back, and the share price, yeah, about $15, if it holds true to that belief. So this could be good buying at $15 if you consider this company to be high quality. And it's remained above the 200-week moving average throughout its life. Thank you for that question. Happynow says, after the MTM, which is now Metallium debacle, and then today's lithium, I just can't take a break at all. Like yourself, I don't fully follow stock analysis on decisions, but I find it so compelling. Any Spruik shares just drops and drops when regarded as sell, stocks just balloons and rise and jumps. All in all it's teach me, amongst other things, is that you're one of the good guys. Well, thank you for that. Very nice words. Tell it the way it is. And I can assure you, you are a very, very rare breed indeed. And the time you put in for your viewers, congrats on your gains on lithium. Thank you as always. Okay. Yeah, that was just, that's a problem. Some of that is just luck. What happened with lithium was just luck on that day. Just luck. Sometimes you can't. It's just luck. Either way, it's just luck. And a good example of this was Ampol the other day. Just trading Ampol, and then they announced an acquisition and share price popped up. Sometimes it's just luck, but if I do have a saying, when people, wish you luck, you have an exam, wish you luck. And I always say, no, luck is for those who are unprepared. Luck is for those who are unprepared. You don't need luck. If you're prepared, if you have a plan, you're prepared, if you know what you're doing, and that is why we should have a plan when it comes to investing. Luck doesn't play any role. Well, it plays a small role, but it won't be the significant reason why you're a successful investor. Anyway, so thank you for those kind words. Happy now. Sensei says, can you explain what is the NSX, National Stock Exchange? I'm pretty sure. And how many companies are on that registry? Not a lot. And how can people buy companies listed on the NSX? Have no idea. Up to you if standalone dictated video or if answer will be answer and reply segments. Oh, here we go. So it's in the answer reply segment, not a standalone video. NSX, they are listed on the ASX, National Stock Exchange. They do release pennies for C's. Not even close to a buy for me. Never's been a buy for me. I'm pretty sure they call the National Stock Exchange. Let's just Google NSX, National Stock. I've never I've never had a close look at this exchange because they're really small. And when I say they're really small, whoops, excuse me. If you have a look at the most recent of Pennies 4C, they had cash receipts of $125,000 in that quarter, and for the year, 1.3 million. So there's not a lot happening with this particular exchange. So I would not even know how you buy. NSX Limited announces proposed acquisition by the CSE. What is that? Oh, so the Canadian Securities Exchange is buying NSX. How does that work? Okay, that's interesting in itself. That happened on the 19th of May. Well, there you go. That shows you how closely I follow this company. Fast Track switch to NSX. Apparently, it's the new home for resources. Why agri companies choose NSX. Here we go. Looks like the very little volume based off market data. The biggest company on this is SUG, which is Sugar Terminals. Market cap of $231 million. If you have a look at the order book, a few bids, but no one's willing to sell. It's interesting because this is the first time I've gone through this, and I've never heard of that company. All these other companies are really small. In fact, some of these companies are market cap below $1 million. Is this all the companies? Is this all the companies? This might be it. Because looks like there was like a few trades the other day. Okay, so I think we can stop it there. I don't think it's anything to consider, and they're being bought out. And I just have no idea how you buy shares in this. How do you buy shares on NXS? On NSX. How do I trade shares on the NSX? All trading on NSX is conducted via NSX broker participants. When you decide to buy or sell shares, you need to place an order with a broker participant. And who would that be? Oh, they have some rules here. What companies can list on the NSX? Minimum of 50 shareholders, minimum market cap of 500,000, 2-year adequate track record. Here we go. Here's some brokers: Bell Potter, BGF, Burrell Stockbroking, Cameron. So there's quite a few here. Macquarie Securities, Patterson Securities. In fact, I've actually heard of most of these. So that's it. You need to looks like buy shares through those brokers. Anyway, I think that's all I'm going to talk about when it comes to NSX, and really I have no interest. Groovy Shoes has some nice little insight here into Veem, although this was in the mid to late 90s. During his time, or her time, with Rand in that period, the Collins subs were labelled the highest paid shore posting in the Navy because they were a lemon and continuously breaking down, even when brand new. And the appointed ship repairer's name, Veem, stood for very expensive engineering mistakes. Is that the same Veem as the company listed on the ASX? It'd have to be, wouldn't it? Veem. Oh, share price up 9.13%. Have to be, because it's the same sort of area. Maybe it's new management, that sort of thing. This is about the Australians' Collins class submarines. Yeah, of course. Definitely the same company. Yeah, there you go. So some good insights there. Now, that's in the past, not 30 years ago. So this company completely different. Maybe new management has changed things up. And really, Veem, the only reason this popped on my radar was a chart. They also released that announcement, and the share price did pop up. Sometimes it's all it takes. And in fact, the chart looks pretty good. Look at the volume coming in as well. Really nice volume. So the chart looks pretty good for this very expensive engineering mistake company. Okay, Sensei says, thoughts on Cosol. Is it a falling knife? So it's gone from 125 to about 59 cents. Or excellent buying opportunity. Very liquid stock, says just Jim Kramer. Now, Cosol did release a negative trading update the other day. Share price did not drop all that much, so it must have been priced in. That's what I'm thinking. Update on financial year 25 performance on the 8th of August. Share price on that day dropped a little bit. In fact, the share price now is higher than it was that day. So obviously, the bad performance was already priced in, and you could probably see that just by looking at the chart. Share price had dropped a lot. Now the chart it's a big no for me. This chart, I have traded this in the past. I wouldn't call this highly liquid. I think you get trading every single day. Yeah, for me, if you get trading every single day, it's not highly liquid, but it's not liquid. Like you can't buy when on the minute or on the second you want, unlike Telstra or CBA. So you might have to be a little bit patient within the day. But when I see trading every single day, I refer that as it's liquid enough that I can take a position, unless I'm trading it. I'll be a little bit more hesitant if I'm trading it. Anyway, for me, this is more of a if we actually go to Cosol, it's definitely not high quality. Revenue has been growing nicely, 49.5% revenue growth over the last 5 years, 23.8% earnings per share growth. Apparently, P ratio is at 12.1, which may mean it's cheap with the share price dropping a fair bit. Market cap is just above $100 million. Operating margin is 12.8%, return on equity and return versus capital, or above 10%. So even though I probably not refer to this as a high quality company, everything is screaming out high quality, but I think you'd have to delve a little bit more deeply. The revenues increased nicely. So this could be an opportunity. Maybe I should take a closer look at Cosol. So I'm in two minds when it comes to that company. Nam says, do you see any good ASX stock opportunities going forward? Just your opinion. Yes, there's many opportunities. Many opportunities going forward. Lots of opportunities. But I can't answer your question because I don't know I don't know your particulars. I don't know your goals. I don't know your investing strategies. But no matter your investing strategies, no matter your goals, there's opportunities. There's opportunities. So many opportunities out there right now. And I think that's an absolute truth. It's not an opinion. I think it's an absolute truth. Sabra Tashaha, can you please do a technical analysis of the GQG partner? I can definitely do that. Now, they did release something the other day, which I don't have to talk about because it's just technicals. They did release funds under management on the 8th. Share price dropped on that day. And then I saw an article, I think it was Morningstar or something, or maybe it was Livewire, I forget who, and they were just saying this is so cheap, but funds under management was disappointing. So let's have a look at the chart for GQG Partners. And, it's that support. Look at that, that support. Now, otherwise, the chart does not look good. And it is at support. $1.75 is a nice little support level. Now, probably a low-risk way to play this would be if the share price drops below, say, $1.70, that would be fairly negative, but there could be a little bit of upside here. Now, probably another way to play this would be, see this downtrend line? It's a pretty strong downtrend line. Now, if the share price breaks above that, which is about $2.20, that would be sort of a breakout of the downtrend, and that would be a good little signal. Anyway, so not for me right now. Now, the only reason I might take a position in QGQ Partners would be if I think there's really good value. If I thought this was high quality, good value, that's when I might take a position, but I don't think I am there. Jake Chard says, can you please cover Treasury Wine? ASX Treasury Wine update was today, people said was good update. I thought it was satisfactory. I did think it was satisfactory. Yeah, I thought it was satisfactory. I don't think it beat expectations or anything like it. It was in line with expectations. They're doing a buyback, which I actually think maybe that's a good thing to do because I don't think the company is that overvalued. I'm trying to remember exactly what I thought when I saw their report. And this was a few days ago, so I do tend to forget after a while. And as we wait for that to open up, we can have a look at the chart. I'm trying to remember. Yeah, there was some nice growth. Here we go. They have all these weird things like EBITs and EBITDA or EBITDAs. So you do have to sort of understand that. And sometimes they will have the definitions in here somewhere, but they don't have it here. NSR, trying to remember what that is. But everything was up. Everything was up. Now, if you have a look, where was it? I think it was this. I think it was Treasury Wine. Now, maybe it was in their media release. Yeah. So if you have a look at the headlines, the first thing they mention is statutory profit up 341.8%. So that's the first thing they mention. So just keep in mind that their reported profit, the growth, that's sort of a little bit misleading because they would have had a write down the previous year or one off the previous year, and that really exacerbated their growth in the statutory profit. And statutory means reported. That is the profit they do report. And you'd see a lot of media releases saying, oh, Treasury Wine profit increases 341%. Wow. Oh, what tremendous growth in profit. But that's sort of misleading because they had a one-off the previous year. So let's have a look at Treasury Wine and let's see the news. Let's see if media did that. Yeah. Oh, no, there wasn't as much as I thought there might be. Wasn't as much as I thought there might be. So that's good. That's good. Anyway, so just keep that in mind. Where is it? But everything looked pretty good. I thought this was okay, to pretty good. But I think some of this would have been expected, if I remember correctly. And I can't remember if they did release any sort of update. The share price did increase a little bit on the day, and that is what I'm looking for. The share price did increase a little bit on the day, but not great, which means the results were in line. There was nothing surprising in these results, and we know because the share price didn't go up or down significantly, unlike baby Bunting. But the thing that interests me about this chart was interesting, maybe not anymore. Share price in a well-defined downtrend. There is no debate about this. Share price in a well-defined downtrend. Question is why? But if you have a look at the weekly chart, the share price is now below. In fact, the share price is at the last time share price was this low was 2015. We're almost at a 10-year low in the share price. So is the market being a little bit overly pessimistic about this company? And the share price has dropped below the lows this company saw back in COVID-19 and when they have those Chinese wine tariffs. So I think there is a chance the market is overreacting, but there's just nothing in the chart, the daily chart, that makes me think the share price won't drop any further from here. I have nothing to really scream out to me that this is a buy right now, except maybe valuation, maybe. Mr. Fantastic says, what's your running pace, Kneppy? Well, it depends. Like if I'm doing a 100-meter sprint, I can do that 100 meters in 9.41 seconds. But if I'm doing a marathon, I can do that in just under 2 hours. So it all depends on your distance. Like if I'm doing a 100-kilometer run, I can do that in, let's say, 3-4 hours. Now, I'm joking. I am joking. But there is some element to truth. It all depends. Like a 5K run, I could do that now at 22 minutes. So we're talking about 4 minutes 30. My quickest time in 5Ks, like 3:40. Now, if I'm doing a long run, like the other day I did 26K run, I do that slow. All my long runs, I do slow. Slow and steady is the way to go when you're doing long runs, unless I'm training for a long run, like a marathon, then I will, prepare in according with that. So when I was training for my last marathon, I'd do 36K training runs and I'd run those at my marathon pace. So it depends. So is it a short run, long run? And I do actually like long, slow runs. So my running pace in my last long run would have been 7 minutes 30, I think, per K, which I find really enjoyable. And when you do it actually slow, you can run further. You can run a long, long way if you run slow. DSHW5C says, I don't trade currency, but check out the 5-year AUD INR being nearly perfectly range bound. AUD INR. See if I can find this. INR. How do you find this? It'll be in foreign exchange. Oh, is this the Indian rupee? Which I thought it was, but I wasn't going to say if I was wrong. INR. Is this it here? Here we go. And we'll do the weekly. Oh, look at that. Look at that. Oh, yeah. Break. I'm going to just go on a break for a second. Okay, I am back. Okay, yeah, this is, what can you say? This has been going sideways for 5 years. I like these because you can just put a line like that and another line sort of like that. Don't have to be exact. There it is. And yeah, it's been trading in a range, and what you'll be waiting for here is a breakout above the range. Now, again, I don't trade currency at all. It's not for me, but this is exactly, if I saw this for an individual company, I'd get excited if I saw a breakout, particularly when something's been going sideways for 5 years. Sort of like maybe CSL. I'd say CSL's been going sideways for 5 years. Maybe not like this. Close, isn't it? Close. And when CSL breaks out, whoa, that's going to be, I think there's a chance the share price could go on a long-term bull run. So we saw this back in 2011. Share price of CSL went sideways for, went sideways for 5 years, and then share price went from $30, $40 to $260, $280. So share price went up 7-fold over the next 8 years. So don't be concerned about these sideways movements of share prices or anything, because when the share price breaks out, that is great times. Possible great times ahead. Okay. Thank you for that. So I would have realized, would have known. VB Ed says, I asked ChatGPT why the market didn't like the Telstra results today, and it stated that the reason is because of slow growth being achieved in mobile income, and the future 2026 earnings guidance is below market expectations. Now, yes. Okay, I can definitely see that. Because any sort of guidance for 2026, and I'm surprised to see how much brokers, well, actually, I shouldn't be surprised. So a lot of brokers already have 2026. They even have 2027 expectations. In fact, you can see it. For instance, if you go to Telstra, I'm not sure if this is going to work for Telstra. It does work for other companies. And if you go to their, we'll go to revenue, not operating revenue, we'll go to revenue, and we'll go to income. Hopefully it's going to work. Net income, and sometimes, they have it here. And in training, in Fiscal AI, you can go all the way to financial year 2028, and there's an E there. These are expectations. So this is the expectations of Telstra. In fact, what we'll do is we'll make this period shorter. So what we've got here is 2024, 2025, financial year 2026, and financial year 2027 expectations. So I'm assuming this is consensus, and they're expecting a little bit of growth, but not a lot. Not a lot of growth for this company. And by the way, I looked at the P ratio of Telstra the other day, and it was 25.8. I was like, really? Telstra has a P ratio of 25.8, and if you go back through time, look at their revenue growth. It's virtually flat. Now, a little bit of earnings per share growth over the last 3 years. I think a lot of that is just share buybacks, if I remember correctly. They're doing a share buyback. So a lot of their growth in earnings just because of share buyback, but no growth, very little growth. And I've always been shocked when brokers recommend this company as, oh, they've got tailwinds behind them, but they've never shown that they can take advantage of tailwinds in the past. So Telstra is more of a training stock for me. It's definitely not a high quality company. And the reason I say that is have a look at Telstra's long-term chart. This is a chart of a non-high quality company. And people would be shocked that I would say that. Telstra, of course it's high quality. Have a look at this chart. This is the weekly chart going back to when they listed. And on 1999, this is not the chart of high quality. Share price high for this company was back in 1999 at $9. And this is more of a trading stock. And right now, it's looking favorable. It's in an uptrend. And I've done this before, and why not do it again? I'll put this as a line, and we'll get rid of the moving averages. And we'll also put CSL, new price scale. I'm not sure. Same percentage scale. Oh yeah, so this is CSL versus Telstra since 1999. And I can almost guarantee you, back in 1999, people would have been buying Telstra just because it had a high dividend yield. And your returns since then have been meager with Telstra compared to CSL. In fact, CSL, we're talking about 8,000% return. Telstra at, well, negative return. Well, that's not including dividends. But yeah, so Telstra has not been a good investment. Has not been a good investment. It's not a high quality company, and I will stick with that forever. Telstra is not a good investment. Okay. Thorley Photography says, thanks for the video. There are stocks you used to follow and we don't hear about them anymore. Austco Healthcare, Alcidion, Fineos are all up and looking good. Is there any reason you took them off your list? Well, here we go. I've recently done a video featuring Alcidion and Fineos because both of those companies released pretty good pennies 4Cs for the June quarter, and they are featured. So you will see videos, not standalone videos on these two companies. I was very close to taking a position in Alcidion within the last 3 weeks. And it's more of a medium-term position, but I've held Alcidion in the past, and they've always disappointed me. So that's the main reason I did not take a position. Fineos is looking really good. Just maybe valuation when it comes to that company. Now, when it comes to Austco, I own it. I own Austco, and I have no reason to sell it. It's not a trading position. It's a small cap company that I want to own for the long term. So I have no reason to even think about selling Austco, and they keep releasing good results or good announcements. And the most recent one was it a profit upgrade? Yeah, guidance upgrade on the 23rd of July. So this is a company I've owned maybe for a year. Let's have a look. Austco Healthcare. Now, when I first bought Austco, it was a trade. I bought it as a trade, and then I had a closer look and I went, yes, if the share price or the chart turns against me, do I really want to sell this? And my reasoning was, or my thought was at that point, no. So I bought shares in September last year. So I've almost owned this for a year. And in fact, the chart looks good. And this is a case where the company keeps doing really well financially, upgrades, that sort of thing, and the share price and the market responds. So for me, I haven't talked about Austco for a while, but I'm still a holder. And I'm not even sure if Austco made it into my top 5 stocks on that day. What day was that announcement? 23rd of July. I can go back and have a look. Did I mention Austco on that day? I'd be shocked if I did. It came in number 2 on my stocks of the day, behind Telix. So there we go, Austco. So I'm a holder of Austco, Alcidion, and Fineos. Talked about them in that video, pennies 4C video, and the chart does look good. You can see the share price popping up when they released their pennies 4C. I think it was the 24th of July. And the share price has pulled back. That's why I was thinking of taking a position, because the share price pulled back to 10 cents. And I was thinking, ooh, 10 cents. And currently the share price is 11 cents. And the chart looks pretty good. And Fineos, now if their market cap was like 200 million, I'd be probably all in this. My market cap is $1 billion. So a little bit less keen on this one just because of valuation. And not sure if I could define Fineos as high quality just yet, but it has a potential within the next 10 years to get to that point. Anyway, so just because I don't talk about companies doesn't mean I don't follow them. Anyway, so Sensei also says, just a Simply Wall Street link. Oh, it says, may have found a future gem. Yes, another reason why I'm owning it, because I think it has a lot of potential. Charts Bureau says, Kneppy, what about Kincora Copper? Has this company got tailwinds behind it? I have never heard of Kincora. Kincora. So let's have a look. I've got to spell it right. Kincora Copper. KCC. Even the T code I don't know anything about. No, there's a lot I don't know. They've just done a consolidation. So obviously shares an issue was an issue and they had to decrease it. Typically when I'm looking at a company for the first time, I want to know, is the company, like if it's a mining company, is it in production? Okay. Now they did not release an Appendix 5B. Let's have a look at their presentation. They released on the 6th of June. This would give us some insight to this company. Now, the very fact they did not release a quarterly report is really interesting, because there could be reasons behind that, but let's have a look. As we wait for that to open up, I'm just going to have a look at the chart. Chart, oh, it looks interesting. The short-term share price has popped up. We saw some really good volume coming in April and then again in July. So share price has more than doubled in a fairly short period of time. And the share price is at the previous highs. So just based off this chart, it does look more interesting. Okay, Kincora investor presentation. Gold, copper and gold explorer, project generator. Dual listed, it looks like. So straight away, because it's an explorer, and this is exploration company. They're not in production. For me, this is more of a story stock. So I have less interest. Personally, I have less interest in these sort of companies. Market cap is $10 million. Yes, so I don't really listen to this much or look at all this, because this is just, they're trying to sell the company. Skin the game, greater than 40%. I do like that. 40%. So the management have skinned the game. I like that. But again, I just don't know these projects. There could be a lot of potential. I just don't know. Project generator business model. I don't know what that is. Is this sort of diversification? And then they talk about stuff I don't know. Why New South Wales porphyries? Yeah. 6 deals, $110 million in partner funding. Why a prospective project generator model? Okay, pipeline. So a big question for me is, when will they have any sort of revenue coming through? So this project generator, is that going to be soonish, when they'll have some money coming through? And the one thing I'll probably say here is, you probably know way more about this company than I do, and your conviction might be way higher than my conviction on this company. Now, the reason, because I think this company is more of a story stock, there's a lot of things that can go wrong or go right for this company, and I just don't have any confidence in which way it's going to go. So this could be a great buy right now, or it could be a terrible buy. So I just don't have that confidence in Kincora. I'd love to know your thoughts. Since you probably know way more about me, you should leave your thoughts. Leave your thoughts in the comment section. Ben Hutchinson is getting fairly excited about DGL. Winter is over, so the opposite of Game of Thrones. And I have a feeling he's getting excited because DGL share price just went ballistic recently. Now, I don't think they released anything, so this could be the market getting excited about upcoming results, maybe. The market is thinking results are going to look pretty good, maybe. I'm pretty sure they will release their results, towards the end of August. So maybe the market is getting excited, but let's have a look at what has happened in the chart the last few days. Now, could this be just a bit of a wouldn't say dead cat bounce because share price doesn't drop, but this sort of one-day candlestick is really interesting because the share price increased 13%, and that does look interesting. Okay, volume coming through, but what has caused this? So it's going to be really interesting to see if the results were pretty good. Now, we saw this sort of rally back in October last year. You can see the share price rallying, and that fell over fairly quickly. And I'm pretty sure we saw a bit of a rally, a bit of a rally back in February last year. And then they released results, and the share price just collapsed. So we've seen this sort of thing happen before with DGL, but the share price is significantly lower. And I think there could be value in this company at this point. But yeah, good work, Ben Hutchison. Jack says, can you do a chart on VEE, Veem, and Iluka and Coronado? Do you think they are good buys based on their charts? Okay, so V looks, I've already looked at this one, haven't we? So this one looks pretty good. This one looks pretty good. I like the volume as well. This one looks really good. On the back of that contract, renewal. So I do like this chart for Veem, and I love the volume. So everything looking good for that one. Iluka, let's have a look at this one. Pretty sure that's what you asked for. ILU, yep. Nice little breakout on the 11th of July, and really the chart looks pretty good as well. I like this chart. And you can also see the really big volume coming through when we saw the breakout. So that chart looks pretty good as well. But again, it's mining. And if anything goes negative in this space, so this, I'm pretty sure this is mineral sands. I could be wrong. If anything goes negative in mineral sands, the share price will pull back. And last one is Coronado. And I am trading Coronado. So this one is a trade for me. Again, this is more of a medium term. But because the share price has increased 50% from when I bought, I actually could take profits in this one. Now, this is on the back of the company releasing a bit of an update, which I thought was quite positive because they've released really negative updates. And then also they released a quarter, I think it was a quarter report. I think it was quite positive. And I was like, oh, this is actually positive, particularly in the medium term. The results were not great, but the outlook was a little bit more positive. So I just took a trading position. And this is more of a medium term, and I'm glad it's a medium term. Oh, that's the other thing. The share price popped up on that day by 28% and then dropped 18% the next day. And I went, ooh, I think this is a nice little potential buy here. So I bought at 20 cents, and it's at 31.5 cents now. So, and I like this chart as well. And it broke above a nice little resistance at 25 cents, well above that. Anyway, so charts of all three look good. And since I am trading Coronado, I like that the best, but Veem looks pretty good as well. Oh, K23 man says something really interesting here. Don't want to be a wet blanket, but baby Bunting's valuation puts me off. After the price rise today, it's on a pro forma P of 30 and forward P of 22. I'll be honest with you, I actually did the same thing. I actually had a look at their profit and I went, expected profit for next year. I went, sure, even with the share price rising now to this valuation, even on that profit for next year, forward-looking profit, the valuation looks a little bit funky for me. But what the market might be doing is going, if you have a look, say baby Bunting, what the market might be thinking is, well, this is a turnaround. And maybe the company will release more upgrades and the company will do better. So according to Fiscal AI, the P ratio is 81. It's not that high. But if you go back in time, have a look at the revenue and go back to their profit. This company had profits of almost $20 million in 2022. So I think the market is saying, hey, I think the company can get back up to that level. So that's $20 million profit. But just if you just assume the company could get back up to that level, the current market of the company is currently, with the share price rising 40%, is currently, come on market index, is currently 350 million. So even if they get back up to a profit of $20 million, the PE ratio is still just below 20. So even though I like the share price rising 40%, I like the one-day candlestick, valuation sometimes does matter. And I'm struggling with this one. So thank you for that. K23, K23 man, you're not the only one who saw that. VBAD says, G'day Kneppy, what are your favorite market sectors that you like to trade and to invest in for long-term hold? Okay, trade anything. I will trade anything. You name the sector, I will trade it. But I do have my preferences when it comes to short-term trading and medium-term trading. So medium-term, definitely mining, because in the short term, a little bit more volatility. Other than that, anything in the short term or medium term when it comes to trading, anything. That's a great thing about trading. I just don't leave anything out. I will trade anything. You name it, I will trade it. Now, for the long term, definitely tech. So anything that is growing. So not only tech, but anything that has a potential to grow. That's what I'm looking for when it comes to long-term quality holdings. Growth, growth, growth. So that means companies that aren't growing or don't grow as much, yeah, I'll leave them out. But anyway, Finelli says, hi Kneppy, is Celsius holds CELH on the Nasdaq on your high quality company list? I don't know, but what I'm going to do is I'm going to do a standalone video on Celsius. I've already written it down. In fact, I might do that today or do it tomorrow. Where did I put it? So, there it is. It's towards my back. So there it is, Celsius. So I did Keyence and AstraZeneca yesterday, and I'll do Celsius either today or tomorrow. So standalone video on Celsius. Is it a high quality company? Okay. Is this it? Oh, 2 more to go. Justin Kramer says, how do you psych yourself up to do bigger trades? Example, put 20% into one trade like BNF. Of all stocks discussed in Saturday's show, which stock would you buy and would you buy lots? How do you psych yourself up to do bigger trades? This is all back on conviction and confidence. So if you have high confidence, high level of conviction, I don't think you have to psych yourself up. So that's how I would do it. So if I ever put 20% into one trade, I have to be confident. I have to be confident. So for example, if PM or Pro Medicus right now fell from 350 to say there was a massive correction in the market and Pro Medicus fell from 313 to say $31, I would put a lot of money into Pro Medicus. I would be heavily concentrated in Pro Medicus. And that can be true for many other high quality companies. If I saw the share price of these companies drop a lot, I would become way more confident and my conviction will rise that I'll be more confident putting a large amount of money into those particular holdings. But those aren't trades, are they? So when it comes to a trade, it's just based off confidence. But when it comes to trading, my confidence tends to be lower than when it comes to high quality companies. Okay. Of all stocks discussed in today's show, which stock would you buy and would you buy lots? Oh, damn it. I just talked about Pro Medicus. Has to be Pro Medicus. Although it's maybe not now. Everything else being equal, Pro Medicus, but valuation, it is high. So that's a company I would love to own for as long as possible. CSL. I'm going to say CSL. CSL right now because the share price has gone sideways for 5 years, and I think it's getting to the point where CSL is looking really interesting, and it's growing. CSL is still growing. In fact, let's have a look at CSL. I've mentioned CSL maybe once or twice. Let's have a look at the CSL P ratio. Very simplistic. Oh, is this not working? No, it's working. It's very slow. P ratio is at 31.2. You might think that's pretty high, but let's have a look. But look at the revenue growth. It's all above 10%. And I think the margins at 26.6, return invested capital, return equity, really nice. It's a high quality company with growth. And the P ratio is not that far away from CBA. So if I had a choice between CSL and CBA, it's CSL every day of the week. But I think with the share price going sideways for 5 years, it's consolidated. We've gone through a period of multiple contraction. So the market is less willing to pay a premium, even though it's growing. And if you have a look at the P ratio of this company, and this is what happens when a company goes through multiple contraction. So apparently the P ratio was 25, not that long. Oh, that's right. Yeah, the share price has bounced up. So if you go back last 10 years, you have to go all the way back to 2016 to last time the P ratio was this low. So I do think there is a chance. particularly if the margins improve a little bit. You're going to see some pretty good growth in earnings and revenue, and you might see a period of multiple expansion, and that could see the share price rally 100% over a short period of time. So CSL would be my choice, maybe. I don't know. And I'll be honest with you, I can't think of all the other companies I've talked about. Fishbowl says, hi, is this the biggest bull run you have ever seen in Australia? So many stocks at multi-year highs. ASX 200 may hit 9,000 next week. Other assets like crypto and housing hitting all-time highs. I feel so much wealth has been created by investors and most people here are happy. Champ. Even though I was not investing at the time, there was a really strong bull market. We go to the XJO. There was a really strong bull market before the GFC. I would say this particular bull market is 15 years long. No, 16 years long. This particular, and now in that bull market, we did see the COVID-19, and I think there was a very short, I don't even think there was a bear market. I think there was just I'm not going to call that a bear market. That was not a traditional bear market. So I'm saying this particular bull market on the ASX has been going for 16 years long. Now, there was a really strong bull market back in between 2003 and 2008, 5 years, where the XJO doubled. And we've seen the XJO double more than double in 15 years. But if you go back through time, it's just bull market after bull market. And that's why we invest, because over time, the stock market goes up. So, yeah, pretty good week, by the way. Oh, gee, look at that. Up one. Oh, wasn't that good of a week. Thought it was going to be better. So is this the biggest run you've ever seen? Well, actually, technically you're right. It's the biggest bull run I've ever seen because I haven't been investing that long. I'm just fortunate, very lucky that I started investing near the bottom of the bull market when it started. And I'll be honest with you. People back then were telling me you shouldn't be investing in the stock market. It's too risky. It's too risky. And for me, that was a really good sign to get in. I'm not joking. People were saying you're going to lose all your money. Stock market is too risky. That's the perfect time to get in when everyone's saying, oh, it's too bad, it's too risky, you're going to lose all your money. And that was in 2010, 2011. That was near the start. Anyway, so I'm not going to talk about housing. Crypto, yeah, my crypto has increased fourfold since I bought. Maybe things are looking too good. And maybe we need to see a really big correction. I don't know. Wait there. I'm gonna ChatGPT this. Copy. Let's see what it says. Oh, I've got to ask it first. I'm just gonna write that question. Just see what it says. No. What happened there? What's it doing? I think something is wrong. There we go. That's right. Not sure what was happening there. You're asking whether Australia is experiencing the biggest bull market ever in its history, and that's a fascinating question. There you go, Fishbowl. You have asked a fascinating question. Well, they're saying this bull market started at the market lows in 2020. I'm not sure if we can call that a bear market. It's a very short-term bear market, and it's a weird bear market as well. Apparently, it requires a deeper, more granular comparison against historical Australian data, which isn't readily available or conclusive today. Anyway, so for me, I think this bull market goes all the way back to. Although, if you have a look at this, you can see if you just have a look at the moving average crossovers during this 16-year period, you can see quite a bit of moving average crossover. So it hasn't been smooth sailing. But if you go back to this particular bull market in the 2000s, there was no. It just look at that. It was a massive 5-year run. So we haven't really seen that, have we, during this period? Yeah. So maybe that was the best bull market we've seen from 2003 through to 2008. Even this bull market from 1995 through to 2002 was pretty good. And there was another really good bull market, back in the 80s, from 83 through to 87 before it crashed during the what do you call that? The October crash. Yeah, that was a pretty good bull market as well. Okay, that is all I have for this particular video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.